Hey everyone, it's Wilson, and I get asked quite often, especially from the newer traders. Some of the feedbacks that we got was, hey, if I'm day trading, should I short a stock by short selling, or should I go long on the stock and take my profits? Remember, you're day trading, so you can go either way. You can short, you can go long. I'm 85% long most of the time. I hope for the stock to go up, and I do short sell as well, especially when making my scalping plays every single day. But that's only when I spot the momentum that is a good position for me to actually start short selling the stock. And I'll explain that with an example, with a chart of a play that I made today. But let's go over for the basics real quick. So going long for those that aren't aware, usually just means that you're buying a stock and you're hoping that the price will go up so you can make a profit. For example, if you're buying a stock at $1 and it goes up to $2, that means you're going long on the stock. You know that it's going to make you $1 per share profit. Basically, is the long strategy is good for all types of trading, of course, but for day trading, it's really good for scalping, especially for the pumps, the gapper pumps, the gap and go strategies, any type of momentum pumps, strong volume pumps, and it's just a good thing, especially after you see a massive short. If you identify a massive short, you can go long and get in for that short squeeze for the quick scalping profit. So I love to go long. I love to look for short squeezes. I love to see when the stock is weak and it picks some momentum again for the breakouts. There's so many strategies you can use. If you watch or if you look under my channel and you search for the strategy videos, you see everything from short squeezing to playing gap and goes to playing pump and dumps. I share a lot of strategies on going long, and I'm 85% long most of the time in the stock. Is Going long can also be good for swing trading, especially if you predict that the price will go up after earnings or something like that. But I never trade earnings. It's just so risky, and even with good earnings, the stock still drop most of the time. But if you really believe in the company and you've done your fundamental analysis and you're a long-term investor, then going long allows you to buy a stock, hold it for a little bit, and there's really nothing to lose on that unless the stock drops. So it's going long could be used for wide different strategies, and I think there's actually a lot of strategies that you can use that I personally favor, and it's my trading edge, so I like to go long most of the time. Now I do short sell as well, so let's go into short selling. Short selling is you're basically borrowing money to sell a stock, hoping that the price will go down. So depending on the situation, if a stock is overbought, you can always short it, and you can use indicators such as the RSI indicator to find overbought stocks, or if a stock is just over pushed. Short selling, as long as the stock continues to go down, you will make money. So the thing about short selling is that there's a lot more requirements, such as that you need a margin account in order to short sell a stock. And most of the time, a margin account of $2,000 is required in order to have the option to short sell. For example, if you have a cash account on E-Trade, they don't let you have the short as an option. You have to upgrade to a margin. You can use a platform like SureTrader, and you can start short selling with a minimum of $500. You can watch my other video on my review on SureTrader. The thing about short selling is that you can lose an unlimited amount of money, but in theory you can also lose an unlimited amount of money going long, because if the stock continues to go down and it tanks, then you will continue to lose money, whereas short selling, if it continues to go up, then you will be losing money. The problem with short selling is that if you only have $2,000, which is the minimum for most margin account, is if it does continue to drop and you lose a limited amount of money, what the brokerage can do is actually just decide to exercise your stocks and sell them. I mean, and buy them back. So what happens is that if you're praying that the price will continue to go down after it goes up for a bit, then your brokerage can actually decide for you to say, hey, I don't want to keep borrowing you money because it's super risky, and you're going to negative. So they can actually just buy back the cover, and it might not go your way. Whereas with long, even if you lose, if the price keeps going down, you still won't necessarily be in such a bad position. Certain brokerages don't support short selling, mainly because of the margin requirements and because it's super risky. But short selling is super powerful, and I know probably, I would say 80% of the top most successful traders short sell more than they go long. That's just their style. There's a lot of strategies you can use for it, so that's what they're good at, and that's what they like to do. So with that said, let me show you an example of a play that I made today, where I did both going long and going short. Inside Thinkorswim platform right here, if we look at the ticker TOPS, was a play that I made 3 times today, both going long as well as going short. So this thing actually popped up in my gapper scan. You can look at my previous video that I put up yesterday on how to scan for pre-market gappers. I saw a lot of volume. I saw that it was trading pretty steadily, and the level 2 was looking really nice for me. So pre-market, I decided to play this as an early start. As soon as the market opened, I saw the green candle, so I actually got in. And as soon as I got in, I was long on this stock all the way up until roughly 157. And then what happened was I waited, and I was watching the trend, and then I saw a little pullback. I didn't short it here. I was still watching it, and then it pushed all the way back up to 184 at its highs. Now, this is where the shorter kicked in. I was waiting for this the entire time. So as soon as people started dropping down the red candle, I actually got in about 172, which is when the massive short kicked in. I short sold the stock, and I was riding it all the way down until 140, so 1.40, and that's when I bought back the cover. And then I watched the stock the entire time, all the way until it hit quite low at roughly 120, and I got back in for another quick squeeze until roughly 131. So all the trades that I made, both going long and going short, was all within I would say a 10-minute to 15-minute time frame. But this is how I like to scalp, and this is why I like momentum trading. I got in for a size of roughly 3,000 position each on each single one, so it made me a good amount of profit. But this is how I like to play a stock, the same stock, a couple times every single day. Once I see that, as you can see right here on the bottom, the RSI indicator, it was seriously overbought. And then as soon as it was overbought and I saw the red candles kick in with the short seller on high selling volume, I decided to short it and ride the wave. So I rode the wave all the way down, and I followed the trend. And then as soon as I was watching a little bit more, I saw the buying volume come back in, and I decided to go long again. And the RSI indicator was the one that told me that, hey, you know, this stock is oversold now. And then I saw strong buying power on the volume, and I saw that it was trading a little bit low back to where it actually opened. So I decided to get in and go long again. So there's different strategies you can use. There's no such thing as the best one. There's no such thing as long is better or short is better. You kind of have to, as a day trader especially, or you're scalping or making momentum plays, you have to adapt to the situation. And right here, you know, it was just overbought. So follow the shorting trend, and then as soon as you see it's oversold, then you buy back the buying trend and it goes back up. But you have to make sure that there's enough volume and use your indicators such as the RSI to determine whether or not you should short or long a stock. Now, this only applies to day trading. I know some people that like to swing short. Now, there's something that could be dangerous about swinging short, is that you might have to pay margin interest for every single day you hold the stock. So there are a lot of risks associated with short selling, but at the end of the day, it's up to you, and you should use both strategies and adapt to the situation as a trader. Now, there are certain stocks that I would not have shorted for sure, is DCIX. This thing has been on a freaking rampage. I mean, ever since Friday's push, the shipping company, you know, it's been making its plays all the way up to like $10. And then look at today. If we zoom in, I mean, this thing opened up from like the low, like, I don't know, like 16 all the way and traded high to 28. I mean, this is ridiculous. I would have shorted it now or at the 28, but I would not have shorted this stock at the open. I mean, it's just ridiculous because of such a powerful play at the pre-market hours, as well as the powerful push from Friday. So there's certain stocks that I don't. But for these, I like to watch very, very, very closely, especially the RSI indicators and as well as the whole overall trend of how this is trading. So this stock, when it jumped so high, we knew that is the momentum play is over. So you can short it. As you can tell, it's back to 21.24 now from $28. But this is not a stock that I would have shorted at the open, or would I have shorted it on Friday because of such a strong push. I mean, look at this buying volume, it's insane. So there are certain things that you don't do, and such as HMMY is another one where it jumped up like crazy, and as a shorter, you have to wait for the time to kick in. So I like to incorporate both strategies, but I'm a day trader, as I mentioned. I mix some swing trading, but mainly day trade, so I like to adapt to the situation and only short when it's necessary. But I'm 85% long. Well, I hope this video kind of helped you guys make a decision. Again, there's no such thing as the best one. Make sure you use both strategies and adapt to the situation and look at the charts, look at the trends, look at the indicators. I hope this video helped you. It's Wilson. Hit that thumbs up button or subscribe to this channel if you want to see more stock videos. Thanks again for watching all.